Right now, a financial black hole is quietly forming right above our heads. If you think the highly anticipated SpaceX IPO is your golden ticket to becoming a generational millionaire, you're being fed a multi-billion-dollar lie. We are talking about a valuation so hyperinflated that it eclipses the net worth of Coca-Cola, Disney, and McDonald's combined. But behind the curtain of Mars missions and satellite internet lies a terrifying reality, a hidden financial trapdoor designed by Wall Street elites, where the rules of investing have been completely rewritten to ensure you lose before the rocket even leaves the pad. Now, just take a deep breath. To understand how this actually affects your wallet and your future, let's break this down as simply as possible. Welcome to the Business Blueprint. Look, I get it. The idea of owning a piece of the company that is literally conquering the cosmos is incredibly exciting. It feels like buying Apple in 1980 or Amazon in 1997. But today, we are going to look past the hype, the viral tweets, and the spectacular rocket launches. Over the next few minutes, we're going to look at the cold, hard data. By the end of this video, you'll possess a masterclass level understanding of the terrifying mechanics behind late-stage private mega-valuations and why the ultimate space monopoly might be a financial house of cards. Act 1. The Valuation Illusion. To see the real danger, we have to expose the ultimate corporate illusion, the private market valuation. Traditional companies go public because they need money to grow. They open their books, show their profits, and let the public decide what they're worth. But SpaceX doesn't play by the rules of capitalism. For years, they've stayed private, funded by a highly exclusive club of venture capitalists, sovereign wealth funds, and private equity sharks. Every time a new insider buys a share, the valuation jumps by $20 or $30 billion. It's a closed-loop echo chamber. This is artificial scarcity at its finest. By keeping the supply of shares incredibly low and the hype incredibly high, Elon Musk has created a psychological premium. But here is the multi-billion-dollar slap in the face. When a company IPOs at a $250 billion valuation, all the massive, life-changing 100 times growth has already been sucked out by the private elites. You aren't buying at the ground floor, you're buying at the absolute ceiling. Act 2. The Starlink subsidized trap. But wait, it gets deeper. Wall Street justifications for this valuation rest entirely on one pillar: Starlink. They claim Starlink is a printing press for cash, bringing high-speed internet to every forgotten corner of the globe. But look behind the curtain of pure profit. Starlink's entire infrastructure is incredibly fragile. They aren't just competing with local telecom companies, they are operating in a geopolitical minefield. When Elon Musk unilaterally decided to alter Starlink access during international conflicts, it sent shockwaves through the Pentagon and global superpowers. The arrogance of a single CEO controlling global wartime communications has forced governments to realize a terrifying truth. They cannot rely on a monopoly controlled by an unpredictable billionaire. The European Union, China, and the US military are now pouring hundreds of billions of dollars into creating their own independent satellite constellations. The moment these government-backed alternatives go live, Starlink's addressable global market shrinks overnight. Act 3. The internal cash burn. And then there is the internal friction. To keep Starlink operational, SpaceX must launch thousands of satellites every single year just to replace the ones that burn up in the atmosphere. It is an endless, multi-billion-dollar cycle of capital expenditure. SpaceX is essentially trapped on a financial treadmill. They must build bigger rockets to launch more satellites to generate more revenue, just to fund the bigger rockets. The moment the capital markets freeze up, or an IPO fails to raise the expected mountain of cash, the entire feedback loop collapses. So, who pays the price for this massive financial pressure? The ordinary consumers. To prep the company for a stunning IPO presentation, SpaceX has been aggressively squeezing its user base. Hardware costs are rising, data caps are being quietly tested, and early adopters feel completely abandoned as customer service is automated away to protect profit margins. Meanwhile, the competitive chaos is reaching a boiling point. Rivals aren't just sitting still, watching the SpaceX monopoly dominate the skies. Jeff Bezos's Project Kuiper is securing massive launch contracts to deploy its own rival internet constellation. Rocket Lab is rapidly scaling its reusable rocket technology to undercut SpaceX's launch prices. The global space race is no longer about human discovery. It has turned into a brutal, unforgiving corporate knife fight to commodify the orbit of our planet. This leaves us with one ultimate, high-stakes question. When the dust settles and the SpaceX IPO finally hits the public market, will Elon Musk work another financial miracle and defy the laws of economic gravity? Or are we about to witness the spectacular, catastrophic crumbling of the world's most ambitious private empire? If you love deep corporate thrillers and want to unlock the hidden blueprints of global monopolies, hit that subscribe button right now. I want to hear from you. Is the SpaceX IPO a brilliant leap forward? Or is it a disaster waiting to happen for retail investors? Leave your honest predictions in the comments below. I read and replied to them personally. Thank you for watching, and we'll see you in the next blueprint.